Back, you're watching Closing Bell on CNBC-TV18. After what was a day of brutal selling on the stock markets, we move away from there, come back to some news coming in from the parliament. First up, it was another day of ruckus and disruptions in the Rajya Sabha as the opposition continued to protest. Rituparna Bhuyan joins us with all the updates. Ritu.
The proceedings of Rajya Sabha have been adjourned till tomorrow. This was done after there were repeated disruptions by the members of the opposition in Rajya Sabha. The disruption started after chairman of Rajya Sabha declined to take cognizance of a notice initiated by the opposition parties regarding a no-confidence motion on the deputy speaker of Rajya Sabha. Not only that, the Rajya Sabha chairman Venkaiah Naidu also admitted a government motion regarding suspension of 8 MPs, including Derek O'Brien and Sanjay Singh of Aam Aadmi Party, which was then, accepted through a voice vote. Thereafter, we saw repeated disruptions by the members of the opposition. In fact, the Rajya Sabha chairman repeatedly asked the members, 8 members of the Rajya Sabha, to leave the floor of the house. They refused to do so. They remained seated in the Rajya Sabha chamber. After which, there were repeated disruptions, and then subsequently a decision was taken to adjourn the proceedings of the House till tomorrow. With that, it's back to you.
All right, Rituparna, thanks a lot for that. With that, we talk about specific stocks. M&M, that was the one which was down almost 5%. This, as we learned from sources, that they're likely to accept HAAH or Ha Automotive's bid of $258 million for SsangYong Motor Company. Remember, M&M had paid almost around $463 million for SsangYong Motor Company back in the day, in about 2013. After this news that came by, as Parikshit spoke about it, there was a wave of profit-taking on M&M, coinciding with the decline that we saw in the markets as well. Parikshit joins in with those details. Parikshit.
Talks between Mahindra and Mahindra and Ha Automotive, a US-based retailer, have been on for a while now. Ha has been looking to make an investment in Mahindra's Korean subsidiary SsangYong Motor Company. Remember, M&M wants to completely exit SsangYong, or at least reduce its stake below 50% from the current 74%. We now believe that Mahindra and Mahindra is likely to accept Ha Automotive's bid for $258 million for SsangYong Motor Company. M&M is considering this proposal, which came in last week. SsangYong has, remember, a short-term debt of $336 million US. Ha, as one of the conditions for this bid, has sought delay of debt repayment to creditors. SsangYong Motor Company needs $430 million to normalize operations. So this bid that is coming in from Ha Automotive is nowhere close to what the company really needs. Mahindra itself had purchased a 70% stake in SsangYong in 2013 for $463 million. We believe that talks between both companies are in advanced stages. We really don't know how much of a stake is Mahindra willing to divest for this money, but we believe that a final call will be taken in the next few weeks.
Parikshit, thanks a lot for that. With that, we move on to the GST compensation row. Finance Ministry sources are indicating that 21 states and union territories opt for the first option to make good for the lack of funds in GST compensation kitty. Remember, there were 2 options. Timsi Jaipuria joins in with what she's picking up. Timsi.
Well, what we are learning from Finance Ministry sources is that 21 states and union territories have opted for the first option to make good for the lack of funds in the compensation cess kitty, so that the compensation funds can be released at the earliest. Sources say that it was earlier states like Manipur and Sikkim which had decided to go with option 2, but later on they also changed their preference to the first option. Just to remind our viewers, in the last GST Council meeting on 27th of August, Centre had proposed 2 options. First, in which states could borrow 97,000 crore rupees with a 0.5% relaxation in the FRBM limits, and second option where states could borrow entire 2.35 lakh crore rupees. Meanwhile, sources further said that since till now, what we've seen the scenario is that 21 states have given their choice. A few states are yet to get back to the centre. And important to note here is that already 10 states have shown their resentment on both the options to the central government. However, they did not reach the Finance Ministry. They rather wrote to the Prime Minister on this. But as per the GST Act, only 20 states need to pass any resolution in the case there is a voting required on any issue. And in this council meeting, that is the next one, which is on 5th of October, what is to be seen is whether there is a voting case or not, and how soon government decides to come out of this entire complicated negotiations, because they say that if those states who do not reply till 5th of October, then they might have to wait till June 2020 to get their compensation dues, subject to the condition that the council decides to extend the cess collection period beyond 2022. Let's see what happens next. Back to you.
Timsy, thanks a lot for that. 5th October is the important date we need to keep an eye out on, and option 1 so far looks like the one which has been agreed upon by at least 21 states, as Timsy has been talking about. With that, let's move on to an exclusive conversation that Shireen Bhan had with TCS CEO Rajesh Gopinathan, who said that the opportunity is real, the recovery is real, but we're not out of the woods yet. Moreover, he also reiterated the company's commitment to ensure that there are no layoffs in this situation. And let's listen into some snippets from that interesting chat.
I'm quite confident on what we had originally said. At the peak of the crisis, we had put out saying that we believe that we'll get margin recovery by the time we get to Q4. We are quite strong on that trajectory, and I'm quite confident that we'll be back there. And into the medium term also, just the nature of the demand and the nature of the opportunity should put us in a very stable margin space. And our competitive position in the industry is quite strong and stable. So I'm looking at stable margins rather than margin expansions. In April, when I spoke to you, I said that we are committed that during this period, we are not going to do any layoffs, and we are fully committed to our people, and we are investing more and more in retraining and technology upgradation. We have stayed true to that, but I'm also happy to share that not just have we honored the offers that we have started onboarding many of our outstanding offers. So we have made about 40,000 offers, and in this quarter itself, we'll onboard about 10,000 of those fresh joinees. We are seeing within the context of the deal sizes, we're seeing a very stable pricing environment. And that is in the current space with maximum volatility. And that gives you good confidence about the medium term when the demand challenges that have been there for the last 6 months start receding. We should see even better supports for the pricing side.
All right, that's some communication coming in from the MD CEO of TCS, one of the 3 stocks of the Nifty that were in the green today. But let's talk about Happiest Route Mobile. Actually, after Happiest Minds, the cloud communication service provider Route Mobile saw a bumper listing today. The stock listed with a 100% gain and thereafter ended 86% higher on a day. The BSE lost 4.5 lakh crores in market cap. Rima has more on this listing. Rima.
After the strong debut by Happiest Minds last week, Route Mobile today has seen a bumper listing. In fact, even the subscription was overwhelming. It got subscribed by more than 73 times. And this is what the company does. If you do any online transaction, whether it's a financial transaction in a purchase or you're trying to log on to an app, you typically get a one-time password, an OTP, which could be via an SMS, it could be an email, or it could be a voice-activated call as well, an automated voice call. Now, this OTP service is provided by Route Mobile. So the 2 big trends which could benefit Route Mobile going ahead, one is increasing mobile subscriber base, and 2, increasing digitization of enterprises. I think this is the story that investors seem to like. But when you look at the financials of the company, its track record has been pretty good. Over the last 3 years, the revenue growth rate has roughly been 38%. The profit growth has been about 22%. Its working capital is negligible because a bulk of their customers are actually on a prepaid model. So they collect the money up front. The company has indicated that the money raised will be used to partly repay their debt. They'll partly use it for acquisitions. So more acquisitions will further bolster growth for the company. The only risk is client concentration because the top 5 clients contribute about 50% to their overall revenues. With this up move, the stock is now trading at 58 times FY20 PE. So that's on a trailing basis. That's Route Mobile. Clearly, there is a lot of retail frenzy in these new IPOs.
Retail frenzy indeed, not just Indian IPOs, even the IPOs that have taken place on the US stock market. So we will keep an eye out on this development as it moves, even in an otherwise weak market. Talking about markets itself, let's get in a big market voice. Earlier today, we spoke with Mahesh Nandurkar of Jefferies on what he makes of the markets as well as his top sectoral calls. Listen in.
The market is pricing in a lot of good news already, and seemingly the valuations may appear to be significantly higher than what the historical numbers have been. But the point is that for IT services, and I would say broadly for markets in general, we have to look at valuations also in the context of where the current risk-free rate is. The Indian IT services are obviously gaining some kind of market share, and that trend is likely to continue. So yes, we continue to like that sector for sure. The insurance sector looks quite good. The consumer discretionary itself, including select auto names. So those are still going to be the names that look good for us to play the recovery. The opportunity is quite big, and we are just scraping the surfaces. And some of these companies are also gaining market share from their state-owned counterparts as well. So the competitive dynamics is working in their favor. And talking about the recent run that we've seen and generally looking at the valuations, the thing is, one thing that I would say all of us have learned over the last 10, 15 years, maybe longer, is that when the fundamentals are supportive, like it is in case of insurance, the valuations can possibly go to the levels that we haven't really seen before.
All right, so that is some big voice coming in from Jefferies. With that, we'll step into a short break. But before we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor. This empowers you to make the right decisions with your money. Well, before signing a check, we always ensure whether it's crossed or not, right? Similarly, never leave anything blank on your KYC. Strike off all unwanted options while filling the KYC form. For example, an investor who only wants to trade in the equity segment will put a tick against it and strike off the F&O and currency derivative segments. Remember, not striking off these blanks in the KYC is like issuing a bearer or a blank check. You don't want to be doing that.